Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 17th of January 2024 and here are the questions we will be answering today. How is Tata Group reinventing itself? Can India touch $100 billion in farm exports by 2030? Will Tata Motors rally hit a speed breaker? And why is France's new PM in the news? Gujarat's Dholera is finally getting a large semiconductor fabrication plant. While Vedanta's plans are still hanging fire, Tata Group may start churning out chips by the end of this year. And the salt-to-software conglomerate is also building a 20 gigawatt lithium-ion storage battery factory in Sanand, just 95 kilometers from Dholera. Clearly, the company is rapidly cementing its footing in new age technology. In our first episode, Shivam Tyagi and Kasturi Akhil tell us more about how the conglomerate is reinventing itself. When it ventured into salt making way back in early 1980s, Tata was the first company to use vacuum evaporated technology. It gave salt a uniform feel and consistency. The company then sprinkled it with some iodine, creating a brand which it is still relishing with the country. From selling salt to making complex parts for cutting-edge fighter jets, Tata Group has always looked at new age technologies as enabler. Back in 1909, it established the Indian Institute of Science. It is still the country's top-ranking university, way ahead of IITs. In 1915, the company built Western India's first hydro plant. And TCS, which was founded in the late 1960s, needs no introduction. The conglomerate is now among the first movers in the field of green energy, semiconductor chips, and artificial intelligence.
They have the understanding of the technology space. TCS and Tata Technologies and many other companies within the Tata Group have always been in the cutting-edge technology space. They have been in information technology, TCS being one of the largest players in the world. So they understand that space. The second thing which I think is very important is there is so much of internal opportunities, internal consumption opportunities, right? They can, Tata Motors can use a lot of their own technologies from other sister companies. So there is enough ground for them to test, enough ground for them to prove their technologies before they really roll out.
Back in 2022, Tata Sons chairman N. Chandrasekaran had said that the group has a 7.46 trillion rupees investment lined up for the next 5 years for its existing as well as new tech-based businesses. In green energy, the group has announced a combined investment of around 1.25 trillion rupees. The company is investing in a solar and wind energy plant in Tamil Nadu, an EV batteries plant in the UK, and a lithium-ion batteries gigafactory in Gujarat. According to reports, Tata's renewable energy currently accounts for 38% of Tata Power's generation capacity, which is expected to grow to 70% by 2030. Apart from chip manufacturing and the green energy push, the Tatas are also moving fast in adapting artificial intelligence solutions throughout their businesses. The company has partnered with California-based software company NVIDIA to leverage AI in Tata Motors, Tata Communication and TCS. TCS will leverage NVIDIA's AI capabilities to build generative AI applications as well as upskill over 6 lakh employees. Both companies are also working on building an AI supercomputer. So what synergies can this new age reinvention bring to the Tatas?
When we talk of the 3 large groups in India entering into the new age cutting edge technologies, the best synergy lies with the Tata Group. Tata Power is the largest integrated power company in India, which has been in the forefront of adopting green energy. So it's quite natural that all these green energy initiatives would be front-ended through this company. Similarly, TCS is the top big tech company in India, and along with the rest of the technology companies, in the group, like Tata Elxsi and Tata Technologies, they cover a large spectrum. So, chips and AI is a natural extension. Coming to energy storage, which bridges the gap between the production and utilization, this fits well between Tata Power as a producer and building an extensive EV charging network on one side, and you have Tata Motors, which is spearheading EV production in India on the other side. So, in each of these, you'll find a strong thread connecting the Tata Group.
Tata, meanwhile, is also planning to build one of the country's largest iPhone assembly plants in Tamil Nadu. The facility aims to house 20 assembly lines and a workforce of 50,000 within 2 years. However, Tatas too have had their share of challenges in venturing into new age technology. Tata knew the group's super app venture failed to garner significant market traction since its launch in 2022. The group has therefore decided to give a booster shot of roughly 8,300 crore rupees in addition to the earlier investment of around 16,500 crore rupees to ramp up its operations. Needless to say, the conglomerate's transition towards sustainability places it in direct competition with the corporate behemoths like Reliance Industries and Adani. The two groups have been rolling out green energy projects in full spate. Gautam Adani has committed a sum of 2 trillion rupees, while Reliance has promised investments worth 1.5 trillion rupees in the coming years. So, going forward, will these three clash or complement one another?
Unlike others, the Tata Group has a strong thread connecting their existing businesses with the new age tech. So they are naturally better placed. However, in terms of animal spirit, I think the other two groups are far ahead. There may not be a clash as the market is expected to be much larger than the capacity each of them is talking of as of now. There would be a healthy competition. However, the possible challenge would be new technologies which could disrupt these. EV as of today is a buzzword, but what would happen to this space if there's a breakthrough in the hydrogen technology? I mean, these are the risks, but I'm sure those investing megabucks should also be having a plan B.
Analysts say that the Tata Group is continuously aligning itself with latest tech and futuristic products to remain among the top. This reinvention is backed by their long experience in technology. But there are challenges too, and Tata Group, with its deep pockets and long-term vision, can withstand disruptions, if at all it occurs. Tata's chip-making facility in Dholera will certainly be a shot in the arm for India's ambition to become a manufacturing powerhouse. Meanwhile, the government has set yet another ambitious target. It wants to export agriculture products worth around $100 billion a year by 2030, almost double from the current export figure of about $50 billion. But it also comes against the backdrop of a slew of export curbs on various agriculture items. So is this target achievable? Abhijit Kumar finds out.
India, often hailed as the emerging breadbasket of the world, has set an audacious goal to achieve $100 billion in agricultural exports by 2030. Surely, it will be a Herculean task given India's export values as of FY23. The farm exports for FY23 stood at $53.2 billion, a marginal rise of 5.6% from $50.2 billion in FY22. Although India's farm exports have been on a progressive trajectory, the growth has been gradual. The ambition to achieve $100 billion in farm exports is not new. In 2018, the government introduced an agriculture export policy, which aimed to double agricultural exports to $60+ billion by 2022 and reach $100 billion in the next few years. But farm exports fell short of the government's initial aim of doubling to $60 billion by some margin. But why are Indian farm exports struggling to achieve a breakout, particularly in a geopolitical landscape marked by wars and the demand for food grains at an all-time high? Analysts believe that a host of infrastructural issues still plague India's agriculture: lack of cold storage and modern processing units, as well as logistical issues like efficient transport systems, diminish the value of a lot of agri products. Consequently, India's farm exports remain heavily dependent on a handful of products, mainly rice, buffalo meat, sugar, and shrimp, which account for almost half of the farm exports in FY23. One of the key hurdles the centre may face in achieving its target has to do with the government's restrictions on shipments to protect the domestic market and manage inflation. In May 2022, the Modi government banned exports of wheat. In September 2022, exports of broken rice were prohibited and a 20% duty was levied on all white non-basmati grain shipments. In July 2023, exports of white non-basmati rice were banned. The next month, a 20% duty was clamped on exports of pre-boiled non-basmati rice too. In May 2022, the government moved sugar exports from the free to restricted category and capped the export volume of the commodity in a year. Since May 2023, exports have stopped completely, with no fresh quotas for shipments being issued.
If you ask me, it is very difficult to increase or diversify your basket so suddenly or so swiftly, because the things that India has banned of late are mostly those which are its main agriculture exporting products. If you ban those items which are fetching you the biggest revenue in the international markets, then it is very difficult for you to diversify or to change your portfolio of exports so swiftly. Over a period of time, you should be doing that. Your export basket should be much more widespread. You should be exporting much more those items which you haven't exported, so that even if some item gets banned or some item gets disputed, some item gets curbed, you can rely on the others to boost your export performance. But it is not happening. Your bulk of the exports are 3-4 items.
Experts believe that to achieve the $100 billion agri-exports target by 2030, India will need to diversify its export basket. India is one of the world's leading producers of fruits and vegetables like mangoes, bananas, potatoes, and onions. But its export performance in the global market falls short. Major destinations for Indian fresh fruits and vegetables are Bangladesh, UAE, Nepal, the Netherlands, Malaysia, Sri Lanka, the UK, Oman, and Qatar. Except occasional shipments to the Netherlands or European countries like the UK, India predominantly exports fresh fruits and vegetables to neighbouring countries only. So, what will it take to boost agri-exports and take it towards the $100 billion target?
One way we can do is to improve the infrastructure tremendously, which has been a big constraint, both at the gateways, that is the ports, seaports, as well as internal road structure. Second, of course, that we have to be internationally competitive. Our prices have to be competitive. In marine products, I feel that the exports can go up very fast, because recently the PLI scheme has really been very helpful in increasing the infrastructure and therefore the exports. I don't see that kind of jump in cereals exports and sugar exports coming up very fast.
And even if we miss the target of $100 billion, how will any increase in farm exports impact farmer income?
Basically, exports are a very good way to improve your income of farmers, because it gives you more value for the produce that you're making in the country. Classic example is rice. Rice is when you were exporting larger quantities of rice, your prices were getting better. Your demand was getting created. You were having places where you were growing rice, which weren't very big growers of rice. Gradually, you have shifted. You have made that market of yours. Take the case of onion. You have made a good market for one of the biggest players in the onion market. Now, suddenly you put a ban because prices in domestic markets are not going down. If you have to have a consistent farming policy on exports, that will ensure a better price for the farmers. There has to be benchmark. If it is above this level, then only will impose a price, if a price cap or a ban or an MEP. And if it falls below, we will immediately lift the ban, because so that farmers get the benefit.
India's farm sector remains an essential part of the country's economy, as it contributed more than 18% to the GDP in FY23. The government's ambitious goal to double farm exports in the next 7 years appears challenging at present. Inadequate cold chains and cold storages, along with recurring export restrictions on agricultural items, pose obstacles to India's agricultural export economy. This may at best result in a gradual progression. However, even partial success in this direction would enhance farmers' income and benefit the agri-industry as a whole.
Moving on, Tata Motors became the third Tata Group firm to cross 3 trillion rupees market cap on 16th of January. On the bourses too, its stock price hit a new high. Tata Motors was a stellar outperformer on the bourses in 2023, being the only large cap stock that doubled its price. Record domestic sales and a pickup in volumes of its UK subsidiary Jaguar Land Rover have led to this rally. So will the counter hold its strength or hit a speed breaker ahead? Rex Cano finds out in this report.
Tata Motors had a phenomenal run last year. It was the only Nifty stock to double investors' money in calendar year 2023, surging 101%. For FY24, it is up nearly 95% and is on course to log the biggest fiscal year gain in 14 years. In doing so, the stock has also outrun its peers and the Nifty Auto Index by a wide margin. In comparison, the Nifty Auto Index has gained 53%, while other four-wheeler makers are up less than 40% each. Further, the ongoing rally also helped the auto major become the third Tata Group firm to cross 3 trillion rupees in market cap on January 16. With this, it is now the 22nd most valued Indian listed firm. Among the key drivers for the stock was a revival in its earnings scorecard. Tata Motors posted its first quarterly profit in 2 years in the December quarter of FY23 on a strong product mix, and Jaguar Land Rover's return to profits as chip shortages eased. It has now remained profitable for the last 4 quarters versus losses in the respective year-ago periods. Analysts believe a strong sales momentum, good product mix aided by a volume uptick for JLR augurs well for the company.
Rally in Tata Motors is led by the strong sales numbers that are coming. The numbers are quite strong. The current company strategy with respect to the EV space is concerned, and the company is moving things in a very aggressive way and designing the strategy with respect to EV space is concerned. That's where Tata Motors is gaining the momentum at this point of time. We can see some kind of further more upside in Tata Motors. Definitely any dip in the stock is a very good buying opportunity for the new investors, and the existing investors can accumulate Tata Motors for a medium to long term.
Foreign brokerages also remain bullish with an upside potential of up to 17% from current levels. CLSA has a buy rating with a target price of 955 rupees, while JP Morgan's stance is overweight with 925 rupees as target. Technical chart setup too remains favorable for the stock, which is trading firmly above its key moving averages.
The chart pattern indicates the prevailing tone to continue. So short-term traders can continue to look for buying opportunities on dips around 800 area, and 780 we believe that is the short-term average at current, which should act as a support. So that should be the stop. Positionally, it has a potential to inch gradually towards 900 levels in weeks to come.
Thus, the rally in Tata Motors is unlikely to fizzle out in the near term, and analysts remain upbeat on the stock for the long term too. Today, on January 17, global Qs and Q3 earnings of Asian Paints and LTI Mindtree will be on the investors' radar.
He's making plans for an early retirement. Business Standard.
After the capital markets, let us now turn our gaze to world politics. France has got a new Prime Minister. He's 34, which makes him the youngest PM in the country's post-war history. And he is openly gay. We tell you more about Gabriel Attal in our Explainer segment.
For now, Gabriel Attal has got everyone's attention. He is young, assertive, and quite candid about his sexual orientation. French President Emmanuel Macron has appointed Attal as he wants to infuse new blood into the thick of his second term. The first openly gay head of government is expected to bring new energy to President Emmanuel Macron's government, which has been weakened by months of protests over pension reform, the lack of a parliamentary majority, and low approval ratings. Gabriel Attal replaces 62 years old Elisabeth Borne. Borne stepped down after serving less than 2 years in office as France's second female prime minister. It took Attal only a little over a decade to rise from an intern in the health ministry to the second highest office in the French Republic. Attal was born in the southern suburb of Clamart in 1989. He grew up in Paris with 3 younger sisters. His father, Yves Attal, was a film producer of Tunisian Jewish descent who passed away in 2015. His mother, Marie de Coris, also worked in the film industry and is from an Orthodox Christian family from Odessa in Ukraine. Attal attended the École Alsacienne, a private school in the heart of Paris. He then studied law at Panthéon-Assas University from 2008 to 2011 and later graduated from the prestigious Sciences Po University with a master's in public affairs. At 17, he joined the Socialist Party and supported its then presidential candidate, Ségolène Royal, in the 2007 presidential elections. Marisol Touraine, the former health minister under François Hollande and the mother of one of his classmates, offered Attal a job in 2012 that led to a full-time position in the ministry at the age of 23. While in that post, Attal also served as a local councillor in Vannes, a municipality in the southwest suburbs of Paris. Attal was one of the first to leave the Socialist Party to join Macron's Nascent En Marche movement in 2016 and was elected to the National Assembly, which is France's lower house of parliament, in 2017. Attal became Deputy Minister of Education at 29. During the COVID-19 pandemic, Attal was appointed as the government spokesperson by former Prime Minister Jean Castex and quickly became a household name. While serving as a junior minister in the budget office between 2022 and 2023, Attal defended the Macron's hugely controversial pension reform bill, which caused protests all over France. In July 2023, he was appointed education minister. Banning students from wearing abayas earned him criticism and brought him popularity at the same time among the right-wing voters.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Last year, when he was appointed Education Minister, Attal brought in reforms against bullying and ragging in French schools. Attal recently revealed that he was bullied in middle school. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.